All right. Hey, everyone. Hope you're having a good weekend. Mine's been okay, but my damn knee still hurts. Really sucks. It's been like a week now. I don't know what it is. I like tweak something in like my kneecap or whatever. Um, anyway, whatever. It just gave me more time to look at the markets. Blah blah blah. All right. So anyway, the first thing I want to look at is let's look at the Qs versus the QEs. All right. Now, this is the Qs. And in this particular ETF, every stock is differently weighted based upon the market cap. In other words, the bigger the market cap, the more influence it has on the indice or the ETF. And I use the terms interchangeably because an ETF actually is designed to track an indice. So I'm sorry if I use those like interchangeably, but it's the same thing. So anyway, think about this. Say there's 50 stocks that are all within this, and they're all weighted at like 0.25% or 0.5%, right? And then say you have three stocks like Apple, nvda, and Microsoft that all have a weighting of like 30%. So you have three stocks that completely dominate this 100 share index, so they can completely overpower the littler stocks. All right. So now the reason why I bring this up is because in theory, and actually in practicality, most of the NASDAQ 100 stocks could be going down. But because the big boys, Apple, Microsoft, and NVIDIA, are going up, the benchmark could still go up, but it kind of masks the underlying weakness. Back in the end of 21, okay, this index peaked the very, very, very end of December, early January. Now, if we look at this ETF, the QQQE, every stock has the same weighting. So whether you're Apple, Microsoft, or you're the 98th or 99th biggest one or smallest one, well, whatever you want to say, so this shows here that most of the stocks in the NASDAQ 100 are kind of going sideways. They've even been kind of trending lower. But when we go to the NASDAQ, that's market cap weighted, we see a very different picture. So equally weighted. Sorry, come on, I can figure this out. All right, so market cap weighted, equally weighted. Market cap weighted, equally weighted. Sorry. Now, let's just take a little bit of a stroll back in history here. And let's go to the very end of 21, which is when the last really big bull market peaked. So the QEs, the equal weighted, peaked in November. So this showed us that the market was kind of starting to fall apart. Most of the stocks in the NASDAQ 100 were going lower. If we look at the market weighted, the Qs, and we look at the same time period, guess what? This one peaked in late December. So what is going on here? Well, people are selling most of their stocks and they're thinking, okay, what's safe? What's worked? Apple, Microsoft, NVIDIA, blah, blah, blah. That's where I'm going to put my money. I'm going to sell my other stocks. I'm going to put my money in there. So these are the things that tend to happen in the ninth inning of a rally. We're just getting this very, very narrow leadership. And eventually everyone who wants to buy those stocks is going to buy them. And at that point, the market can't go any higher, because if you don't have buyers pushing the price higher, it's not going higher. And if everyone who wants to buys, well, there's no more buyers. All right. You don't need to be a market guru to figure that one out. All right. Anyway, I think one of the really important things to watch here for the market in and of itself, sometimes markets are kind of easy to read. Sometimes they're difficult, but sometimes they're not. And I think this is one of those times where it's not. It's a lot of it is about Microsoft here. And look at this action. NVIDIA has kind of been, well, actually, let me just throw up NVIDIA. NVIDIA is it looks like the wind are coming out of the sails here a little bit. Really hasn't kind of done much. Here you got your outside reversal day. And that shows that like on this particular day, people thought it was going to be another up day. The market opened much higher than the prior day's close. But where did it close? Well, it was lower than the prior day's open. In one day, the sellers came in and completely reversed this thing around. Then we have this breakaway gap here. So there are some aggressive sellers lurking out there in NVIDIA. Let's look at Apple. You know, Apple had another kind of weak day. So here's what we need to watch, all right? The tech is in control. I'd watch Apple, the 207 level, about $3 below where we are now, which is for this stock nothing. If this starts to break down, and if Microsoft starts to continue its reversal, I mean, this is a, let's see, yeah, this is technically a bearish engulfing pattern. The blue team is in charge. It looked like it was going to be another higher open, and it was. So in the morning, you would have said, oh, it's going to be another up day. What happened? Microsoft got all the way up to here, and by the close, got all the way back down here. So aggressive selling. Now, think about the straw that breaks the camel's back analogy, right? Most of the straws are broken, man. And there's just a couple of really big straws left. And that would be Microsoft, which looks like it's turning, Apple, which might be turning. So anyway, I think these two stocks will kind of give us insight into what the broader markets are going to do. Position yourself for the downside. Think about puts. Think about inverse ETFs. And yeah, so we'll see you all tomorrow morning at 8. Thanks, everyone.